Hello and good morning in Europe, good evening in United States. This is Ahura with another daily outlook videos. As you know, in this series of videos, we are looking at the market to see what is going on in the market and what we have to expect from today's financial market. So far, it's a new week and we don't have too much news. So let's start with what happened and how we closed last week. As you know, last week we had NFP numbers, non-farm payroll numbers, and uh, surprisingly, it was much better than expectations with creating much more than expected jobs. Just let's go few days, 2 3 days before that. We know that the ADP numbers were a little bit disappointing when we saw that more than 301,000 jobs lost in the data that we had in the ADP data. But things is that the things has changed as I told before also. We have lost the correlation between the ADP and NFP in the past months. That's why we could see that more than I just forget the numbers exactly how many jobs created in it. Let me see the jobs that exact. I just want to say that the exact numbers. The number of the jobs that have been created is like, yeah, here we go. The number of the job that has been created, it was amazing. Let's go. So here we go. 467,000. Okay, that's 467,000 jobs have been created in January. It was much more than 150,000 expecting jobs, and but so it means that the economy is good. Economy is improving, which much better than earlier expectations. Everything is going well at the same time. So which it means that central banks can go towards much tighter policies. At the same time, we had earning average incomes. This average incomes was exact problem. Actually, not to say the problem. It's exactly the point that we need to focus on. That average income has been increasing by to say the exact numbers. Where is the numbers? 5.7 5.7%, 5.7% in the annual scale, in the yearly scale or annual scale in January. 5.7%, which should be around 3%. So we have almost twice more than normal situation increasing incomes or increasing salaries, wages per hour payment. And just in the January, it increased 0.7%. It's normal should be about 0.3%. So it means that the income is increasing too much. And we need to know that when we say that income is increasing too much, it means that employers, they are paying much more to their employees, which it means that we're gonna have higher prices for producers. Higher producing price means higher consumers price, which it means that the higher inflation. So everything again coming back to the inflation. Everything again is about the inflation. So inflation is increasing. Average income is increasing. So, and the employment is going so far better than expectations. And which means that we're gonna see and expect a little bit tight, more hawkish policy than earlier expectations. At the same time, this data increase. I just need to mention that this unemployment rate from 3.9% increased to 4%, but participant rates was increasing to 60, more than 62%. That was the reason to see that even with the more than 400,000 jobs, still we have unemployment rate lower. The market risk is low because we already know what is going on. And this lower market risk increased 10 years bond yields above 1.90% as well. So we have 1.90% 10 years bond yields. And so that's, here we go. And this increasing, this NFP numbers increasing, uh, like kind of expect pricing, like pricing more on hawkish policies means that the a little bit expensive, more expensive dollars. So it means that the US dollars, which fell to 2 weeks low, actually, I think, yeah, it's 2 weeks low, 20 January, 3 weeks low, which it was like 3 weeks low above 95 almost to the 95.20, 95.15. Again, it's increasing. Now we have it above 95.50. So this little bit more pricing on the hawkish policies, again increasing the US dollar. Before I told about the US dollar is even if it falls because after it's touching above 96, we were waiting to see a little bit weakness of 97 actually. We were waiting to see a little bit weakness on that, which it was normally because US dollar was increasing rapidly and so fast. So we need a little bit correction because expected in the chart. But as I mentioned before, above 90, any number above 94 means that US dollar is increasing. And for now, it is increasing. About the gold, with this weaker US dollar helped the gold a little bit to increase. But at the same time, now with the increasing US dollar, we can see the gold is increasing. Generally, we are in a slow uptrend in 2022 for the gold, and it's gonna go farther a little bit slower, but it's gonna go farther because the stock market for now is under pressure a little bit, and this pressure on the stock market, overall slow pressure on the stock market means that the money flow is going to go towards gold. About the oil market, oil still increasing. We can see the oil in a higher above $90, which it was expecting. The geopolitical tensions is increasing. Still, we have the tensions between the Russian and Ukrainian. So it means that the oil and energy market is a little bit more under pressure and under the risk. So therefore, oil still, and at the same time, economy is improving. So we need more demand there. We have more demand in the market. So economy is improving. Geopolitical tensions is high. Therefore, we can see the oil price is increasing. Natural gas also the same. With the, after a little bit correction, after a little bit correction, we can see still natural gas. From the technical point of view, we have any number above $94, above $4. Sorry, above $4. If we see any number above $4 here, it means that still we are. Maybe $4 gonna be here. Sorry. Any numbers above $4. Oops. Here. Any numbers above $4 means that we are in an uptrend. If we if we push it under the $4, yeah, we're gonna change probably from the technical point of view. We're gonna change it to the downtrend as well. But still above $4, we are in an uptrend, and with the histograms of MACD histograms also are increasing, still above zero. Generally, geopolitical tensions means that still we're gonna have the oil in the demand. Yeah, $5.20, $5.20 was a little bit expensive, but something between $4 and $5 for the current situation is not expensive gas. So therefore, we're gonna have the oil between 4 and 5. We're gonna have the gas between 4 and 5 US dollar, and the oil above $90 is expected. Is something normal. About S&P 500 and other indexes in the market, generally the market is expecting for even higher prices, but in a short term for 2022, but the short term be a little bit under pressure. It's normal because with the better than expected jobs, with the higher numbers in NFP data that we had the last week, it means that we're gonna have a little bit more pressure before it start increasing. So before to start increasing, we're gonna have a little bit more pressure, but it's gonna be the soft. And as before we talked about, it's gonna be kind of soft and a side movement with a little bit up tendencies, but mostly it's gonna be the soft and only sometimes weakness, but side movement is much more than expected, about 4,250, 4,300 US dollar for the SP 500. Then slowly at the end of the February with the March, we're gonna start uptrend. This is the market overall market expectation. Same thing almost as with the Nasdaq for now. Nothing changed, and Dow Jones still things are the same. About the Bitcoin, if you remember, we were talking about the 40,000, 40K or 40,000 US dollar. We saw that if we pass the 40,000 US dollar above, the uptrend gonna start. Yeah, this is the signals from the technical point of view that the uptrend is started. And next target is about $44,800. This is the 44,861.8. Fibonacci 44,006. Sorry. 44,600. 44,600 is the next target. And if we can pass this target, then we're going to talk about 52,000. So about 44,600, 52K is on, will be in the radar, but we need to strongly pass the 44,000. For now, this is an uptrend from the technical point of view, and we can see increasing we can see the increasing prices. So this is the general the market expectations. Same thing we're going to have for Ethereum above 3000 above 2000. Actually, for Ethereum, if you remember last week we were talking that the Ethereum situation has changed about above 2400. So above 2400 everything was positive for the Ethereum. And Bitcoin above 57. If you remember, we were talking about the 57 cent. 57 cent was we were talking, but for a long time that 57 cent is amazing time. Is a good time for buy Ripple in a short term actually. For the long term, we need to pass the 82 cents above. If we pass the 82 above, if we can pass this level, 82 cents here. If we can pass, yes, like a little bit higher, yeah, actually we can save and here 80 cents. If we can pass the 81 cents, something like here above here. If we can pass 80 cents above, yeah, if we can pass 80 cents, then we can change the Ripple can change through the uptrend from the technical point of view. From the fundamental side, we are still waiting for Biden's uh, but we should have some announcement from the White House. We kind of say that a little bit better say the White House than say the Biden. The White House is going to have the announcement about the cryptocurrencies market and stable coins and the legal laws about that. So we have to be a little bit we have to be a little bit more caution to see that. Then after that we can say that where exactly we are going to go and what's going to happen. But generally, we have to be a little bit more caution in the market. But from the technical point of view, we can say that in the short term, uptrend is started, and for Bitcoin, we are looking for 44,600 US dollar. Okay, guys, this that was the overall market situation. First day of the week, not much to say. Hope tomorrow again, we're gonna see each other and see what's going on, and we'll be with you with more updates. Don't forget to watch the weekly outlook video as well, which is uploaded in the same YouTube channel. See you guys tomorrow. Bye bye.